Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'm going to guide you through my view of the market. So we'll go ahead and jump right into this. Before we do start, just need to remind you that we are not broker dealers or investment advisors. We're taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. Past performance is not indicative of future results, and we are not subject to trading restrictions, so we can have a position in a security and initiate one at a time. So that being said, we're going to jump into this, but before we do, I just want to remind you, stay in touch with me, please. I love the feedback. I want to hear back from you. Email me at brandonwendell.cmt@gmail.com. You can hit me up on Twitter at TraderBdub. Be careful on Twitter. There's some people impersonating me. Make sure it's actually at TraderBdub because there's some people with some similar names that are trying to impersonate me, so be careful with that. Anyway, also make sure you like the video and subscribe to the video so that way you can be aware of when we're sending out new videos every week and just get them automatically in your feed in YouTube. So anyway, that being said, we'll go ahead and kick this off, and we're going to take a look for this week at the equity index futures as usual to start off with, move into the energy futures, and then we'll go into the stock market and the sector rotation, sector analysis to see what kind of opportunities are out there. So we're just sticking with the U.S. markets. What I've done is I've actually separated the Indian markets now in its own separate video due to the popularity. Decided to make it easier for you guys. So anyway, moving along here in the equity index futures for the week of October 16th, here we go. We'll start off with the S&P. And you can see we're doing this nice stair step to the downside, just strong downtrend right now. It did get a little bit weaker as we're not as low as we were once before on the momentum indicator of RSI, but we're still pretty bearish. We might get a little bounce because we've hit the 50% retracement of the 2020-2021 bull run. So I wouldn't be surprised to see a bit of a retracement here. But on the weekly chart, we got that selling pressure begins right here at about 4,000, 3,900. That if we do get some sort of a bear market rally, we'll turn around and start moving down once we hit that supply. So I don't think we're done with the bear market, not even close. Okay. Anyway, you can see that we're making these highs that we can't get above 60, and that's continuation of a bear market. When you make highs, you can't get above 60. It's telling you don't have enough bullish momentum to change the trend. So we're still very, very bearish here. And, well, sorry, look at this here. You can see that their next demand, that weekly demand and daily demand is pretty much the same area. That 25, 24. Okay, so looking at the S&P, as you can see, when we get to these rallies are not taking the RSI above 60. So basically it says we don't have bullish momentum, or at least enough bullish momentum to start turning this trend around. Now, when we did move down, you can see that the most recent low, when we hit 50% on this retracement value, we didn't have as much momentum as we had before. So we are slowing down on the bearishness. So there may be a small rally, bear market rally, but I don't see much out of it. I see that we do have supply right here at about 4,000, 3,900 to 4,000. So that's likely to be where we stall out and continue to move back to the downside if we even get a rally. So jumping down to the 4-hour time frame, you can see that we pretty much came close to the supply, about 37.43, and started moving down. Once again, can't get above 60, so plenty of bearish momentum to continue lower. Looks like we may start off trying to sell off a little bit this week. Actually, I didn't mark this, but that 4-hour may be an area of demand as well. Let's go into the current market here, and I am on the 4-hour chart. And basically, if we try to rally a little bit, it looks as though that we've got, a drop-based drop area of supply. It's kind of wide compared to the move down, so I'd like to see more selling pressure coming in after the bell rings on Sunday night before we really call that a good supply zone. Maybe even a breach of this prior low first before we come back and retest that. But it is possible to use that area as supply to continue our march to the downside. And our first bouncing point would be 34.60, then 33.16 afterwards. So look for more bearishness. It's been the MO for the past couple weeks. Monday, Tuesday, we go a little bit to the upside, then we end up selling off at the end of the week. So probably likely to do a lot of the same. Taking a look at the rally, or sorry, not the rally, but the drop we've had so far for this year, you can see that we've been moving down. The Nasdaq is leading us to the downside. It's down 31% from the highs in January. The Dow has been holding up a little bit better, but for the most part, the ES and the Russell and the Nasdaq are all in bear market territory still and are likely to continue to move down. As far as this week, Actually not this week, but this rally or drop, sorry, the most recent move that we were in, if you will, is this bearish move that started September 12th, and the Nasdaq is still that leader to the downside. You can see it's down 16% from that point. So looking at the Nasdaq, that'll be the first one to bounce because that's dragging everybody to the downside. It's the leader out of the 4 equity indexes, and it's taking us down. So until we get bouncing, nothing else is going to be able to move up. Now, that being said, looking right now, we retraced 61.8% of that rally from 2020, 2021. Remember, the ES only retraced 50% of this, so it was a little more bullish. But even still, here you can see we're doing the pullback and hit that 50% or 61.8 retracement with less bearish momentum. So that's a positive divergence, suggesting that we may get a bit of a bounce here. However, if we do look at that Nasdaq, let's go into that. And again, I can go to the weekly time frame here. You can see that even if we do bounce, we might run into this origin of some selling pressures, really kind of a drop-based drop supply at about 12,000 to 12,000. We'll call it 12 to 13,000 basically. So we could just do a small bounce coming up this month or next month, and it would just be up to that area before we continue to push to the downside. So definitely seeing more bearishness, but the bounce is going to be led by us hitting demand or some sort of higher lows and higher highs on the Nasdaq first. Looking at the daily chart, we also have a little bit of supply at 11,500 and 11,922. So as we try to move up, we're going to get some stumbling blocks and big push to the downside. We do have positive divergence here though, so we may be close to a bouncing area. And that's what I want to be careful of. That'll set up longer term shorts, but in the meantime, you'll have to play intraday and intra-week going on the long side as we get that bit of a rally. 4-hour time frame, not really much to say on this one. We do have a little bit of supply here at 11,500 again, just like we saw on the daily, and demand's at 10,150 right in that area, but not really getting any kind of a feel for where we might go to start the week. Because we had the positive divergence on the weekly and daily, there might be a small rally first before we continue to move to the downside. Sorry, let me move that onto silent for my phone there. Apologize for the vibration there. Anyway, looking at the Dow, this has been a stronger index. You can see that move that I've been measuring from 2020 all the way to 2021. This has only retraced 38.2%. So it's not as bearish, it hasn't fallen as much, but it's still bearish. And we do see the divergence here as well. So with the Dow, we got slight move to the upside. We're really just stuck sideways with same lows and same highs going on here for now. On the 4-hour chart, again, not really much going on. I'd want to avoid this market. Really, the better plays are going to be shorting on the Nasdaq. Maybe get some longs here if we try to rally, but what often happens is that the Nasdaq and the Russell try to take over as we move to the upside. So when the Nasdaq starts putting in a bottom, instead of trying to buy the Dow, you might be better off, believe it or not, buying the Nasdaq or buying the Russell, because they'll move further faster in the bullish side. So I'm kind of staying away from the Dow for right now. Speaking of the Russell, you can see pretty much the same picture. It's done a 50% retracement, just like the S&P did, and we have a positive divergence, higher lows, even though we made lower lows in the price. We're not doing that on the momentum indicator. So we're still very bearish, but we might get a small bounce up to that same little supply zone here on the weekly chart. That's looking at about, 1775, 1800 maybe. On the daily chart, well, you see that 1800 level is an actual zone, drop-based drop supply. So we did make a lower low here, but just barely, and you could see we had struggle to get below 40, so that's suggesting we should get a bounce. Depending on where we are when we hit this 1800, we might be able to pop through and maybe make a move to 1981, but keep an eye out. When we hit the 1795, if we're below 60 on the RSI, then the zone will hold. But if we're above 60, then we're likely to break through. So that's your catalyst, or not your catalyst, your signal. Looking at the 4-hour chart, really we're just stuck sideways for a little bit here, so I'm kind of staying away until I get resolution and we know what direction the trend is likely to move in. And I just don't have anything yet. So moving along to the energy markets for the week, we're going to go ahead and take a look at crude oil. You can see we bounced very well off that weekly demand zone at 79.91 to 75.70. Question is, how far are we going to bounce, and are we going to continue to go to the upside here? It looks like, again, we had a move up, retracement, and we're continuing to move up. Well, looking at the daily chart, it looks as though, we got, again, a rally, a retracement of about 50%, and now we're trying to push higher towards that 95.84 as our next target. When we did rally here, we went above 60 for the first time in quite some time. It looks like several months. So we have a lot of bullish momentum. When we pulled back, well, we haven't officially put in a low yet, but if we stay above 40 on this pullback, we should have no problem getting all the way up above $100, honestly. So this is an area of demand. I'm not sure why I didn't mark that, but if we go to the daily chart on crude oil, let's do that. And on the daily time frame here, you can see this is a daily demand zone if we're to fall down more. And you can see already the markets are trying to push to the upside. So I'm thinking this may be done with the pullback, and we're getting ready to continue moving up towards that 95.84 and 102 eventually before we stall out for the next retracement. But if we were to fall back, we'd probably get a pretty good bounce here off of 82. But like I said, the market is just officially opened. I'm doing this on Sunday evening as I'm recording, and it looks as though we're already going to bounce here. So looking at the 4-hour chart, again, we tried to move down. We did get a little bit more bearish momentum, so I'm kind of surprised to see the bullish pressure today because we didn't get a divergence here. And that was suggesting we might go down a little more before we rally. But, as I said, going into live market here, if I go to the 4-hour time frame, here we are seeing that demand zone, or not demand, excuse me, that retracement value is actually holding. We don't really have any 4-hour demand till down around 84, to be honest with you. So as we look at this crude oil in a little bit more detail, again, you can see there's a lot of bearish momentum. We did go below 40, so that's suggesting that we will not get a new high, that we should, if we do rally, we should stall out. As a matter of fact, what we could do is kind of identify here a move to the downside and a retracement up. This would give us some possible targets before we continue to go lower, because with a move that begins from below 40, it's not impossible, but it's very difficult to make new highs. So that's suggesting that prices may try to bounce a little bit, but ultimately will continue to move lower before even midweek, to be honest with you, on a 4-hour chart. So the most probable turning point would be here about 87.47. So if we retrace that level, you're likely to see us turn back down from that area. I don't know if there's any kind of a 60-minute or, yep, there is a zone there. I was just going to say, I wonder if there's a 60-minute supply zone in that area. And sure enough, drop, base, and drop. There it is, the zone. And you could probably just use this area right at the 50% retracement and look for a possible shorting opportunity as a short-term swing short on crude oil. Now let's take a look to see where would the target be, and there's a couple ways of calculating this. Okay, so by the way, that's 87.47, so I'm just going to put a line there so we don't have all these retracement levels everywhere. So we're looking at about 87.47, as I said. There we go. Clean this up a little more. So the ways that we can look at this, the best way would look for demand, and that would be our target. The other thing we could do is also project. Now we don't know exactly where the retracement's going to end, but if it does end at 87.47, now we have possible targets, as we move down. And as I said, the other thing would be to look back and see what we might want to target here for the short, because this looks like it might be a pretty good opportunity. This is not a great demand zone, but that's the origin of buying pressure, so I'd keep an eye out for it nonetheless. And maybe target 84.75, and then target 2, yeah, definitely want to get out here before that 82 area. So I would say target 2 right in here. So now I've got my targets, we'll set those up, and we'll take a look at the entire position. There's target 1 and 2, and, whoops, what happened here? Target 1, it's not showing the label. Oh, that's why. You put it on the right here. And there it goes. So we're looking at a possible trade opportunity. As I was saying, maybe going short around 87.47, 87.37 with a stop loss above 88.15. We can put in a line right there as well. And let me set that up. Template as stop loss. But we want to put it above this area, so maybe 88.27 or so. Again, target 1 right around 84.75, target 2 82.32. So there you have it on crude oil. So a possible short opportunity. Looking at nat gas on the weekly chart, we are down into a weekly demand zone here, as you can see, around that 6.421, possibly getting ready to bounce. We have not gone below 40, so that's suggesting that we don't have enough momentum to continue down. Looking at the daily chart, though, we didn't make our measure move, and you can see momentum is dying off. It was going strong and started to flatten out in this area. So we lost our bearish momentum, and we do have a little divergence that could cause a bit of a rally before we continue lower. Same thing on the 4-hour chart. We just started to go a little sideways. I'm thinking this might go a little flat this week. Could pick up to the downside, but really it doesn't look like it's going to rally at all. If it wanted to go up, it probably would have already. It's more likely we're going to go sideways or start to drift a little lower. Probably look for better opportunities elsewhere. Gasoline on the weekly chart also doing a bit of a retracement now after we had that big move down. We barely made it into bearish territory, so this is just a short rally. Not sure if we're going to get a whole lot out of this before we continue to go lower. And as a matter of fact, we made lower high right here. We haven't made a lower low yet, but we'll have to watch and see if that happens. There is a little demand that was left at 245.77, but depending on where we come down and how much momentum we have, we could get through that. So if we're below 40 when we hit this demand, expect to continue down through it. If we're above 40, expect another bounce. Could just be a little sideways movement for a while. And the 4-hour chart, it was suggesting a little bit of bullishness because we can't seem to get below 40. And you see we've gotten rallies out of this before when that happened. So we're in this little basing now. Possibly ready to break, but not really far to the upside, if at all. So not really interested in taking too much of a position on this. More intraday opportunities than I am seeing swing trades this week. And heating oil, interesting enough, made a new lower low and a higher high. But when we made the lower low, we did not go into bearish territory. So it went higher, and we may just get a small pullback. Last week left us with a very bullish candle. So this is suggesting we might continue to go up this week to some new highs. On the daily chart, we got to have a pullback first. You can see we have a negative divergence. We made that second high, new high, with a lot less momentum. So expect a pullback, but then a strong rally after the pullback. Now, where are we going to pull back to is the question. It could be any one of these zones. So we go down to a smaller time frame and look for fresh demand. We used this one already at 3.70. As a matter of fact, let me go back over to that heating oil here for a moment. And I'm using the November heating oil. So if I go to the daily time frame first, which we were just looking at here, you see the 4-hour zone as well. But I originally put in, I believe, for the Fibonacci retracements, I really want to go here at the uninterrupted impulse to the upside. Not sure what I had done on the slides. Let me take a look. Actually went from the entire move up, so let's take a look. You know, this one, it probably is better from the entire move because you can see we actually hit that area, but that wouldn't have been the zone at the time. It would have been this. So either way, I mean, that is the low to the high, so that's probably what we should use. You see it lines up really nicely with that 4-hour zone. That's what I was trying to figure out was, do we line up with the zone? And this 38.2% retracement does line up. There's also possibly, it doesn't quite make it for a zone, but there's rally, base, rally just a little below that has not been tested yet. These go a little lower here. So that might be another possible entry, but this with the correlation between the Fibonacci retracement and the zone, that's a better area. Even though it's been tested, it barely went in the zone that could use a second test and continue to go higher from there. So if we do pull back on the divergence, look for another bounce in that area to get long on heating oil. So that's what I'm seeing on those. We can jump into the stock market now and take a look at the sector rotation and see which individual stocks might give us an opportunity for this week as well. All right, so looking at the sector rotation here, you can see for the last 6 months, Pretty much everything's down except for, of course, energy with our inflation that's going on as well. And we're still seeing that some of the safe havens, healthcare and staples, are outperforming everything else, but the entire market's still dropping. Last week, you saw a little more of an increase, kind of people jumping into energy. I'm sorry, not energy, the staples and healthcare again. It was a flight to safety. So typically that's what you see when the markets sell off. They're the best performers, not necessarily moving up though. So, taking a look at the heat map for the week, you see we sold off a lot on consumer cyclicals. Again, that's expected, but to see the green in healthcare, and it's not everywhere. It's definitely in the drug manufacturers. Interesting, there's some diversified banks that got a boost as well. Not sure what that was all about. That's kind of unusual for that kind of market move, but it's happening. Anyway, we'll take a look at the individual sectors and see what's going on using those ETFs. So, starting off with consumer discretionary, which is normally very bearish, you can see we tried to gap up on the daily market here on Friday, but just collapsed after that. So, lots of selling pressure. Looks like the trend wants to continue. We did a small retracement before, and I think it was just because we got close to the Fibonacci extension. We had a small retracement, and we're just going to continue to move down to 122. There's nothing there to stop us. And it looks, short the rallies in that sector. Looking at an opportunity, unfortunately, we didn't hit our target yet for BKNG or Booking.com, Booking Holdings. And you can see this trade worked out pretty well, but now we have a positive divergence. So it doesn't look like we're going to hit our target. We stalled just shy of it. Get out. The positive divergence means you're going to get a bit of a rally before we drop. There might be a new entry, by the way, though. This looks like a nice little shorting opportunity. As a matter of fact, let me go back to that on BKNG. There we are. And where do we see this? This would have been on the 4-hour time frame or daily. I think it was the daily, wasn't it? Yes. So, going back, there may be a new entry if we do get this rally, because what I'm seeing is right here, great shorting opportunity. As prices come back to retest, say at 1926, you could possibly short there because you do have drop, base, and drop. Now, as far as the new targets where we might go, we have to put in new Fibonacci's basically. So we've got impulse to the downside really beginning here. Our correction back up, take us at 1849 area. And therefore we have targets of about 1620 and 1481. So that is the new possible target for BKNG. Now, if you didn't want to play this as far as a stock trade, because it's pretty expensive, obviously, 1849, you could also possibly use some options here. Just make sure you check to see if option volatility is extremely high, then you want to sell the puts, sell calls. If it's low volatility and you're expecting it to rally, which most likely it would be if we rally up to that area in price, you would see the implied volatility dropping, then you want to buy puts. But you can do all kinds of great things for this. But yeah, I'm looking at BKNG as a possible shorting opportunity going forward here. Okay, so we're going to add that in as a trade opportunity, as I mentioned, on BKNG for the new opportunity here. If we get that rally on the daily chart for BKNG. Now, moving along to our next sector, we have XLC, the communication sector, also showing a positive divergence, suggesting a small rally. Now, I'm not sure if that's the only rally right there that we're going to get, or if we're going to rally up to the 51.57 supply zone. If we do, that may be another shorting opportunity for the ETF here, XLC. So let's go ahead and take a little look at that. Again, on the daily time frame, we have basically drop, base, drop. So that would be our shorting opportunity. I don't know if this Fibonacci is going to be any good anymore, because really what we've done is we've had a new impulse here to the downside. Now, we've already retraced a little bit, but if we're not done retracing and we do come back up into this 51.57 area, then that gives us possible targets, which actually takes us down to our next demand zone of 43.14. So in this case, if we do come back up on XLC, there may be a shorting opportunity, as I said, and I'll go ahead and put this in as a stop loss. Need to bring up the area here. We'll make this a little bit higher. Give it some room. There we go. So about 52.44. Now, as far as targets go, I mentioned basically we're going to be dealing with these two extensions, and that's target 1 right there, 46.36. There we are. And let's do a little bit bigger of a font so we actually see that. Probably 18 is better, or 20. There we go. All right. Target 1. All right, and then for the second one, this would be target 2 at about 43.14. Pretty close, but didn't quite get it. So we can do target 2 right there at 14. So there you go for the possible trade opportunity here on XLC daily chart, and continuing that shorting opportunity potentially. All right, so we got that on the ETF for a possible short. Next, we're moving on. We got XLK, which is the technology sector. Pretty much same thing. We got a positive divergence. You see the higher lows when we made lower lows in price, so we might get a little pullback. Not as great of a supply zone, but I suppose there is rally, base, and drop. Possible shorting opportunity if we do get a rally to about 127. So again, we can go ahead and take a look at that in the chart. XLK, there it is, and the zone. Let's rally, one basing candle there, and then again the drop. So almost came to that demand zone at 112.48, and then if we do have a second target, about 107.21 would be that target there. So possible opportunity on the daily chart of XLK, just again for another short. And let's go back to our charts. Moving along, we had IBM as a possible trade opportunity we were looking at, and you can see it came into the zone. This was a short opportunity, I believe, last week, or I can't remember if it was a week ago. Anyway, you can see it came into the zone, and it's moving down nicely. So the problem was when we hit the zone, we were above 60 on the RSI. So normally when that happens, I do not take a short, because if we're too high, supply is a lie, we're likely to break through. Or like here, when it does work, we typically don't make a fresh low without a retracement first. So since we were above 60, I did not enter, and what I'm going to look for is a possible move back into that zone. If we move into the zone, but we don't have the same momentum, we get a negative divergence, that would be the trigger to get short. So this is still a possible entry. It's just not there yet. So keep an eye out for that. That again is IBM on the 60-minute time frame. XLI, the industrials, pretty much same picture. You see we don't have nearly as much bearish momentum as we had before. Likely to get a little bit of a pullback here, but I don't have a great entry spot because there's, this area of supply has already been tested, so we could go deeper or break through it. So let's look out elsewhere. There was, again, this supply zone that was tested here on the XLB, the building materials, and that sector is also looking for another pullback potentially or sideways movement. There's not a great entry spot here, so I'm leaving that one alone as well. On the energy sector, you saw that that's been dying off, and we also have a negative divergence going on right now. So it looks as though, even though we've tested this supply multiple times, it looks like it's going to hold again and send us back down to 72 as an area of demand. So keep an eye out for that. Not really an opportunity to enter because we've already left the zone, so don't try to chase price here, please. Devon Energy was an opportunity we were looking at, and you can see, unfortunately, it came down and popped through the demand zone. So even though it looked like it was going to be a good opportunity, it just didn't work out. That's the way it goes. XLP, the consumer staples, that has been really weird. We should have had a bit of a rally in this, or at least holding up, and we did hold up a little better than some of the other sectors. You see, it made a higher low, not a lower low, but there's not really any good momentum in either direction. It looks like we're going to get stuck sideways. So instead of making more of an impulse down and retesting this demand at 64, looks as though we're just going to kind of drift a little sideways this week. So wait for a better momentum and probably look elsewhere for trades. The healthcare sector, XLV, pretty much same picture. We made this low where we gapped down, but we couldn't get into bearish territory and eventually close a bit higher. We also kind of hit this area, which is rally, base, drop as supply, and already moved down from it. It just looks weak that we're going to just kind of continue to ping back and forth and go sideways. On the utility sector, XLU, we made a much lower low. Now, this hasn't finished and given us confirmation for divergence, but it's close. We're almost at that first target of 61.8%. As we came off that supply zone, that was a great opportunity, by the way. Hopefully you caught that. That was the supply zone I mentioned last week. We did move into that and have dropped quite a bit. Pretty much came close to first target, but I don't know if we're done. We need to actually officially make a low here by having a higher low and a higher high after the low on this candle. So until that happens, it's not officially divergence. We could keep going lower. So if you're in, just make sure your stop loss is there. It should be fine. Eventually we'll get the target too. We just might have to take a little retracement first. And let's see what else we got there. XLU utilities, that hit both of our targets. So hopefully you're able to capture this. We had a great move as it ran into supply and just completely collapsed. Paused at target 1, hit target 2 last week. And that's also the weekly demand zone. So the big question is, now we hit weekly demand, will the trend reverse? And I think on the weekly chart, when we look at that, you see it here, XLU, it's daily, and we're below 40, way below on that chart. So lots of bearish momentum. We might get a bit of a retracement back up to either 23.6 or 38.2 before we continue to go lower. I thought I had the weekly chart here. That's what I wanted to see. If we go to XLU, weekly, this is what I wanted to bring up. Because we hit weekly demand, normally you'd expect us to bounce and change trend. But you see, we were way below 40. We had too much bearish momentum. So we're only going to get a small bounce before continuing lower. So that's what I was trying to make a comment about, that if we do rally, we're only likely to rally up to the 64.57 or 67.18, then we'll go lower. So you might want to look at maybe even a 60-minute time frame and just see if there's supply in that area. And there's not really anything great here. This, a lot of basing before the drop, but that 38.2 I think is a pretty good possible shorting opportunity, but we'll get there maybe later in the week. We'll keep an eye out for that. All right, so FE, First Energy Corp, unfortunately that blasted right through the zones. That was a loss for that one. Thought it was going to be a good short. It just became extremely volatile. So just the way it goes. The financials, XLF, made a lower low and it's retested the prior highs but has no momentum. So again, it's something we can't really chase because it's already moved away from that supply zone, but it does look like we're going to end up making some new lows this week. So just going to expect that sector to continue to sell off a little bit. On real estate, Xlre, very, very weak. As you can see, we just put in a confirmed new low where we have that higher low and higher high after the low on that green candle. And we did that as a divergence, so I'm expecting a little rally here. Not sure how much more it's going to rally. Those retracements are off. I need to change that because it's Xlre. Again, if we go to the daily time frame here, this impulse down began here. So if we're trying to figure out where we're going to bounce again after we pull back, taking a look at the Fibonacci, we've already gone past 38.2%. I mean, you could possibly argue, whoops, get rid of that, that really this move began here after the gap down, and that's about a 50% retracement. But really, I want to include this high because that gap down is part of it, and that selling pressure is part of the move. So if we go to a smaller time frame, no supply here. On a 60-minute, it may not be done retracing. Even though we did gap up and started selling off again, there's still going to be some legs to this, and we could move up to the 61.8% before diving. Although, again, there's not really any great supply until way up here. So I'm probably going to stay away from that because I don't have enough clarity to figure out where it's going to turn back to the downside again. We did have a well tower trade opportunity we were looking at here. On well tower, we were looking at a retracement back to 63.40. And I don't think that happened. No, unfortunately, I was looking for that pullback, and we just haven't had it yet. Let me just make sure. So looking at well tower again, yeah, this is recent. You can see we've had that move down, waiting for it to pull back. It just hasn't come back to our entry spot yet. So keep an eye out. That's still a pending trade opportunity if it can get back to our supply. And with a little bit of positive divergence that we see here, we might actually get that pullback this week. So I was looking at Microsoft for a trade opportunity. 80% of the time, it's been a mover to the upside, but unfortunately, I couldn't find a great area of demand here. You can see there is a little bit of demand below where we are at 216.44, 212.03. Again, it's from 17th of October to the 6th of November. For the last 15 years, 80% of the time, this has been a winner. 12 out of 15 times. So if we can get a pullback, keep an eye out on this because we may be below 40, but if we have a higher low on the RSIs, we hit demand, that's a positive divergence. We should be able to rally up to those targets. If we are below 40, we do not, and we're basically below this prior low on the RSI, when we hit that demand, do not take the long. We need the divergence to make it worthwhile to get in. If it doesn't have it, then we're likely to break through and continue to go down. Electronic arts was another opportunity I was noticing. This 80% of the time for the last 15 years has gone down. As you can see, very strong shorting opportunity for the next month, 17th of October to 16th of November. And looking at EA, we do have an area of supply overhead of 125.67 to 127.72. Basically placed a stop at about 128.25. Now the first target pretty much used the zone because we already went to that area before. So I would say your first target's really the 113.63. Target 2, though, you want to get out before the next untested zone at 102.23. So Electronic Arts got a possible short opportunity if we could rally up to our entry. Anyway, I'm not doing a special guest. That was last week. I already mentioned this. We do have a day in the life of an online trader coming up. If you're interested in joining me for a full day of live trading info and basically a great interactive opportunity to kind of pick my brain and learn a lot about what I do in the markets, come join me. You can enroll, and I believe the login ID right there, it's a little long, but you can go ahead and capture a picture here. It's wealthbuildershq.com. A day in the life of an online trader, live order form with dashes in between each word. And you can go ahead and join me on October 27th in Long Island. It's going to be from 8:30 in the morning to 4:30 in the afternoon. Love to have you there. If you got any questions, of course, message me or let me know, please. You can email me at brandonwendell.cmt@gmail.com. Also hit me up on Twitter at TraderBDub. And please, if you enjoyed this video, hit like and don't forget to subscribe as well. That'll help me out and give me the opportunity to continue to provide you with this great content. So until next time, trade safe, trade well, everyone, and take care. See you again soon.